Welcome to the Economist in Your Ear podcast. Have you ever considered what it truly takes for a company to not just compete, but to aggressively expand and genuinely dominate across wildly different industries, particularly when even established tech behemoths like Apple falter in such ambitious ventures?
It's a really fascinating question, isn't it? Challenges that conventional wisdom about, corporate focus and specialization.
Yeah, most often you see companies succeed by narrowing down, right? But some just seem to defy that logic.
Exactly.
And today, we're embarking on an in-depth exploration of one such company, Xiaomi, the Chinese tech titan that appears to be, rewriting the rulebook. They've moved from smartphones to electric vehicles with, frankly, astonishing speed and what looks like an unstoppable rise.
Yeah, it's quite the trajectory.
So we're going to peel back the layers today, look beyond the headlines to understand what truly fuels Xiaomi's vertiginous rise, as the economists put it.
And critically examine if those triumphs are quite as straightforward as they might seem on the surface.
Exactly. We'll unpack the arguments for their success, sure, but also dig into the nuances, the potential challenges, things that might be easily overlooked. Is this like the blueprint for a new kind of global tech giant?
Or they may be stretching themselves a bit too thin. It's a really compelling case study. Rapid diversification, aggressive market entry.
Into some of the world's toughest markets.
Absolutely. So we'll be looking at the specific ingredients, what allowed them to move so fast and grab so much market share.
Okay, so to really get this, we probably need to start at the beginning, right? Xiaomi, co-founded by Lei Jun back in 2010.
Right. And they made waves pretty quickly, didn't they?
Yeah.
Especially in smartphones.
Oh, definitely. I remember reading about Lei Jun snagging a Guinness World Record, a decade ago? Selling 2.1 million smartphones online in just 24 hours.
Yeah, that wasn't just good sales. It showed this almost instant connection they made with consumers.
A huge connection. And it seems like that bond has only deepened and...
It really has. I mean, today, Xiaomi isn't just a smartphone company. It's the third largest seller globally.
Right behind Apple and Samsung. That's huge.
It is. But the really remarkable thing, as you mentioned, is how they've built this vast ecosystem around the phones.
Yeah, the ecosystem.
They sell everything. Smart air conditioners, robo-vacuums, scooters, TVs, you name it.
An incredibly diverse range of products, all designed to work together.
Exactly. Seamless integration is the goal.
And this whole strategy, it's clearly paid off, especially looking at their recent recovery. They had that slump in 2022.
Right. Blamed on cutthroat competition, intense price wars, basically.
But they roared back last year. Revenue up, 35%?
It's a stunning 35%. And their market value has almost quadrupled since early 2024. We're talking HK $1.5 trillion.
Which is around $190 billion US. That's not just a comeback. It's a massive statement. Resilience, strategic adaptation.
It absolutely is. And that financial strength, combined with their tech background, really set the stage for their next, arguably most audacious move.
Which brings us to the electric vehicle.
Yeah, the EV market. This is where Xiaomi really entered a completely different league.
And this is where the story gets incredibly interesting, especially when you compare it to, say, Apple.
Oh, definitely. The Apple comparison is key.
So Xiaomi launches the SU7 sedan March last year. Then just last month, the YU7 SUV.
And the numbers, well, they're just staggering.
Tell us about them.
Okay, get this. Over 200,000 YU7 sold within 3 minutes of launch.
3 minutes? That's insane.
It is. And in the last 15 months, over 300,000 Xiaomi EVs are now on Chinese roads.
Wow.
And they have a backlog of orders that's apparently over a year long. These aren't small numbers. It shows massive consumer demand and incredible speed in scaling up production.
And the CEO, Lei Jun, he's not just stopping at sales figures. He's already talking profitability, right?
Yeah, boldly predicting the EV division will be profitable later this year.
Which, in China's car market, that's notoriously tough. Margins are thin, competition is brutal.
Exactly. New players often struggle for years or just fail. So achieving profitability that quickly, it would be a massive accomplishment for what started as a phone company.
Okay, so this is where that Apple contrast really hits home.
It really does. Apple, infinite resources seemingly, a history of disruption, that incredible brand.
They spent a decade, billions of dollars on their EV project.
And ultimately, nothing. They scrapped the whole thing.
Whereas Xiaomi announces its car plans in 2021.
And barely 3 years later, hundreds of thousands of cars on the road talking about profit.
So what's the difference? It can't just be Lei Jun's magic touch, can it?
No, I don't think it's just that. What's fascinating isn't just Apple failing. It's how the context, specifically China's industrial ecosystem and consumer market, seems so critical.
Right.
Xiaomi didn't just build a car in a vacuum. They leveraged an existing national infrastructure, a specific market hunger.
Okay, so let's break that down. What are these unique factors in China that help Xiaomi succeed where, well, Apple stumbled?
Well, first, you've got this abundance of car-making know-how just readily available in China right now.
So talent acquisition was easier.
Much easier. Leijun could basically poach top talent from established car companies, get that critical engineering and design expertise almost immediately.
And it's not just people, is it? I read about parts and machinery prices.
Exactly. Prices for automotive parts, even factory machinery, have been plummeting in China because of oversupply.
Which must be a huge advantage for cost control in a really capital-intensive industry.
A massive boost. Then there's the logistics and regulation side.
Faster approvals, faster construction.
Much faster. Getting a factory approved, built, and running happens way quicker in China than, say, in the US or Europe. That speed to market is a huge competitive edge.
Okay, so favorable market conditions, definitely. But Leidun's personal involvement seems key, too. You mentioned the contrast with Tim Cook at Apple.
Right. Cook reportedly delegated a lot of the Apple Car project, Leijun. He took direct personal control of Xiaomi's car venture right from the start.
And that signaled a real shift in how Xiaomi operates, didn't it?
A profound shift. I mean, historically, Xiaomi was like Apple. They mostly outsourced manufacturing for phones and gadgets.
But not for EVs.
No. For EVs, they deliberately chose to build their own factory in Beijing. A state-of-the-art facility they're already expanding.
Vertical integration, taking control.
Precisely. For strict oversight on quality, the whole process. And interestingly, they're now applying that elsewhere too.
Where?
They're making smartphones themselves at another Beijing facility. And they've got a new plant in Wuhan for connected devices, starting with air conditioners.
So it's a broader strategic pivot away from that old outsourcing model, more control.
Seems like it. More control over supply chains, over manufacturing.
Okay, which brings us to another factor, maybe less tangible, but powerful. The Mi fans.
Ah, yes, the fan base. It's quite something. Leijun has cultivated what some call a cult following in China.
Reminiscent of Steve Jobs and early Apple fans.
Very much so. You hear stories of these Makers fans collecting memorabilia, rushing to buy every new product. There was even that story about a surge in interest in Wuhan University, just because Leijun went there decades ago.
Wow, that kind of loyalty must be a huge marketing advantage, especially for something totally new like an EV.
Absolutely crucial. And what's really interesting, maybe even provocative, is how this loyalty played out after that terrible accident back in March.
Yeah, I read about that. An SU-7 involved, tragically 3 students died. Reports mentioned the autonomous driving system might have been active.
Right, it led to criticism, safety questions, a temporary dip in their shares.
But then,
just 3 months later, demand for the new YU7 SUV was still incredibly strong. It wasn't really quelled.
what does that tell us?
Well, it points to maybe a different dynamic in that market. A profound level of consumer trust. Perhaps even national pride in a homegrown tech champion. That seems to outweigh specific incidents in a way you might not see in Western markets.
Where an event like that could cause much more lasting brand damage.
Potentially, yes. It suggests a certain resilience in their core Chinese consumer base that's quite remarkable.
That's a really insightful point. And it connects to the next piece of their strategy.
Yeah.
Leveraging that huge existing user base.
Absolutely critical. By the end of last year, Xiaomi had, 700 million monthly global users across all their devices?
700 million. And growing 10% year on year.
And that's not just a number on a slide, it's a revenue engine.
How so?
Well, analysts at Bernstein estimate nearly half of Xiaomi's total profit comes from things like games bought on their app store and ads they sell.
Okay.
And many of these users already buy Xiaomi products directly via the app. They've proven very good at getting these users to upgrade, say, to more expensive phones.
Right. So the thinking is, if you can convince someone to upgrade their phone,
Maybe convincing them to buy a Xiaomi car isn't such a monumental leap.
especially since they only need a tiny fraction of those 700 million users to buy a car for the whole EV thing to be a massive success.
Exactly. Plus, there's that demographic alignment you mentioned earlier.
Yeah, the early smartphone buyers from a decade ago, they were in their early 20s then.
And now they're in their mid-30s. Prime demographic for buying a new EV.
It's like they've been cultivating their future car customers for 10 years.
It does look like a very smart long-term play. almost organic market maturation within their base. But of course, Leijun isn't just looking at China.
Right, global ambitions. Nearly half their revenue from phones and devices already comes from overseas, doesn't it?
Yeah, mostly developing markets, India, Indonesia, places like that.
And the plan is to sell EVs abroad, too.
By 2027, that's the stated goal.
Okay, but that brings a major challenge, surely.
A significant hurdle, yes. Because while Xiaomi is big in China, and Leijun is a superstar there,
They don't have that same brand loyalty, that same recognition, or that cult following elsewhere.
not at all. Most people overseas probably haven't even heard of Leijun. So can they really replicate that direct-to-consumer, fan-driven model globally without those foundations?
It's a big question, which maybe explains their next move, the physical stores.
It seems likely. They're investing massively, building a network of 10,000 brick-and-mortar shops abroad.
10,000, up from just a few hundred last year. That's huge.
It's incredibly aggressive.
Right.
The idea seems to be build a physical presence, raise the profile, showcase the cars next to the electronics, create that tangible brand connection where the digital loyalty isn't as strong yet.
Makes sense. An aggressive approach for new territories. And their ambition doesn't stop there, does it? They're diversifying even further.
Yeah, pushing into really new areas. It's redefining what we even think of as a tech company.
Like the humanoid robot, Cyber One.
Right, quite a statement. And even more significantly, perhaps, that advanced chip they unveiled in May.
The 3-nanometer one they designed themselves.
Exactly. That's cutting-edge semiconductor design. Puts them in a very elite group of companies capable of doing that. It's not just buying components off the shelf. It's deep foundational R&D.
And that R&D effort is massive, isn't it? Huge investment.
Colossal. Roughly half their staff are in R&D now. Spending grew 26% last year alone, hitting $3.4 billion.
Okay, but here's the kicker. The R&D spend was more than their net profit last year.
Correct. More going out on R&D than coming in as profit.
So what's the rationale there? That sounds incredibly risky.
It is high stakes. But the internal thinking seems to be develop core tech from the ground up. Find efficiencies nobody else can. Control your destiny.
And raise barriers to entry for competitors.
Exactly. If you own the fundamental tech, it's harder for others to just copy you or undercut you on price.
But doesn't this aggressive, wide-ranging expansion create its own massive risk? Fighting on too many fronts.
That's perhaps the biggest question hanging over Xiaomi right now. They have this ever-growing list of products. They're pushing hard into capital-heavy areas like cars, advanced chips.
And even with the EV success, there's still a small fish in that giant Chinese pond, right? Compared to BYD.
A relatively small player, yes. Selling maybe 20,000 cars a month. BYD sells more than 10 times that. And that EV price war in China is just brutal and getting worse.
Plus, competition isn't exactly easing up in their original business, smartphones.
Not at all. That's heating up too, especially with Huawei making a strong comeback now that the U.S. sanctions impact is lessening on their handset side.
So pressure from all sides. Core businesses, new ventures, all while outspending profit on R&D.
Yeah, the question really becomes, how much can one company juggle before something gives, before the ambition itself becomes the biggest risk?
It's an incredible story, though. Xiaomi's journey just defying gravity, particularly in EVs. Leijun's salesmanship, that fan base, the smart user-based strategy. It's clearly worked wonders so far.
It is a fascinating trajectory, absolutely. But it also presents this compelling paradox, doesn't it? You have this hyper-aggressive expansion, this R&D spend, outpacing profit, cutthroat competition everywhere.
So what's the bottom line? What will ultimately decide if this stunning ascent is sustainable?
That's the multi-billion-dollar question, isn't it? What fundamental qualities will determine if they can keep this up, or if the sheer breadth of their ambition becomes their undoing?
And what does this whole saga tell us about the future of tech giants, especially as they push into completely new, really complex industries?
It raises critical questions. For Xiaomi, and for anyone watching, it's about how long a company can sustain this kind of hyper-growth and diversification.
Yeah.
How long can you defy gravity when your reach seems to constantly, maybe even excessively, extend outwards?